Hello, everyone, and welcome to One Liners, series centered around key influencers and players in the performance marketing space. My name is Joey Liner with Liner Connections. I've been in the performance marketing space for 22 years now. Um, I am really excited to be back from my little summer hiatus. I took some time off. I had a really good first half of the year recording. But I want to take the summer off to kind of regroup a little bit, refresh. And I was out at Contact.io a couple weeks ago and went to an amazing event hosted by some really good friends at ActiveProspect, Squeeze, TransUnion. It was at the Denver Aquarium, which was really cool. Being able to walk through the exhibit and just actually and talk to everybody and go through that together. It was so much fun. And on the ride home back to the hotel, I had shared a ride with some friends um and they basically guilted me and called me out for not having them on my podcast. So Mike Toronto, say hello to everybody, brother.
Oh man, hello everybody out there. As Joey mentioned here, it's kind of funny. We were at the same dinner together. We were obviously meeting with prospective clients and whatnot. And I've known Joey for quite a long time. And we actually were taking an Uber ride on the way back. And on the way back, I was in the back seat and I told Joey, I was like, Joey, I'm a little emotionally scarred that you haven't put me on the podcast yet. And he got a pretty good laugh at it, but you know what? Here I am. So I'm really excited to be here and to tell my story.
Yeah, dude. And thank you for coming on. The next day, we actually sat down and I was like, I actually that was what I was looking for when I kind of took the time off is I wanted to build up this next set of guests that really timely, impactful, what's going on with the economy, what's going on lead gen, performance marketing. And there's some really cool, timely news in your world. So as Mike's joining us today, he is now the GM of financial services at Active Prospect. Congrats, brother.
Yeah, thank you. I appreciate it.
That is freaking awesome. And we're going to dig into that. So I know there's a good story to share there on how you've gotten into that position. But yeah, first, I always love to start with I want to, I want to understand. I always ask folks how they how'd you get how'd you build your professional career, but how'd you get into performance marketing? Like, what was your first soiree into getting into the business?
Oh my goodness. Well, I could give you this story here. So let's just start off at the very beginning. So, through college, I worked as a waiter. So I waited tables for,
Yeah,
geez, I think it was like 6 years. And it was actually not a bad living. I was making about $100 a night and,
yeah.
not doing too shabby at all at the time. And then the financial crisis started. And when the financial crisis started, I went from making it was what, like $100 a night to 10, maybe $15 a night. I remember at one point I was struggling to make bills, whether it was rent, groceries, you name it. I worked through it. Everybody has their tough times, but I went through that. And then I graduated in 2009 with a degree in business administration. I was really, really excited to get started. I applied everywhere at the time. I was like, look, you know what? I'm done with college. I'm going to go through, get a job. And I filled out, I think, hundreds of applications at that point. And the
Wow.
first interview I got called into was actually for Wells Fargo. What happened was I got called in. It was for a group interview, and there was many people there, just standard interview. And I remember them making the rounds in that interview and saying, "Hey, just introduce yourself, tell you what you do." And I remember hearing some of the positions, our people's previous work experience, and it was like VPs. Sometimes they were senior managers, SVPs. And that's because at the time the economy was so bad, these people had lost their jobs in other companies and they were so desperate they needed to get an entry level banker position.
Yeah.
Right. And
Yeah.
so I knew pretty much as soon as that first panel went around, I was like, there is zero chance I'm going to make any sort of dent in here. Didn't get that position, but it was very eye-opening to me because I was like, wow, this economy is a lot worse than I had anticipated.
Yeah.
So me being a a driven individual, I just continued hammering away. I was like, you know what? I'm just going to put in more applications. We're going to eventually get an interview. Got some emails here and there, right? And then one day I got a call out of the blue from a gentleman that I went to high school with. And he worked for a company called Metropolitan Home Mortgage, and he called me to do a customer service entry-level management position. And I had no idea what a mortgage was, pretty
Right.
much. I knew that a mortgage was something that it was a payment you made on your house. So that way you could stay in your house. And that was the extent of my knowledge of what a mortgage was at the time. Luckily, they had a pretty good training program. So the first couple of weeks that I was there, they walked me through the mortgage terminology, and I started to learn what mortgage was. Interestingly enough, after I got through training when I was there, it was about, I think it was like 3 or 4 weeks outside of training. The guy who was in charge of Velocify left. And when he left, the CEO called me and he said, "Hey, Mike, we don't have somebody to use Velocify. I know that I've seen you clicking around. You seem like you get it. I just need you to learn the software, right?" And mind you, I could say at the time my database knowledge was extremely limited, and my lead management knowledge was very limited as well. But being a driven individual, I was like, all right, well, I can do this. I can learn this. So through a lot of blood, sweat, and tears, a lot of testing and things like that, I actually got really good at the software. On top of that, while I was there, I also got licensed in, I think it was 6 or 7 states to do mortgage origination. So I actually was
Wow.
a loan officer
Oh,
at one
wow.
point. And I even got to a point that I was a sales manager within that company. And I don't know if you knew that, but yeah, I did actually
No.
originate mortgage loans. I've made those calls before. I've sent the cold emails, you name it, I've done it. Um,
No,
and
it's key because you can and then you can speak from that seat, like when you're help advising. I mean, obviously, I'm excited to keep going, but I did not know that, so I'm really excited
yeah,
to dig in there, even take it further with you.
yeah, it's so interesting because I've had conversations with loan officers before, and I tell them, I was like, yeah, I know I've done what you've done. I've originated mortgage loans before. I've done pricing. I've gone through and smiled and dialed before in the past myself. So it's not something that I'm not accustomed to. I just happened to do it when I was there.
Right.
So I worked for that company for a couple years, and when I left, I figured I was like, look, I was new in the mortgage industry. I wasn't sure if it was something
Yeah.
that I wanted to do, so I took some time off. I was going to do some traveling, and it was, I think, the second day after I resigned that I got a phone call from my account manager at Velocify, and he's like, "Hey, Mike, I heard that you resigned from Metropolitan Home Mortgage," and I was like, "Jason, why are you calling me?" And he's like, "Well, we have a lot of
JV.
mortgage customers here, yeah, at Velocify, and you're obviously one of our better administrators. I've heard the stories of you working with our team and doing some things, and so we want you to come here and help us with our mortgage clients, right?" So I told him, I was like, "Well, I'm going to take 2 weeks. I just need to do some vacationing and stuff like that. And, I'd be happy to pursue the position." So I started at Velocify. And it was actually kind of interesting when I started there because I was going from being a day-to-day administrator of a platform, which has its own unique, challenges to it. You're doing training, troubleshooting, you name it, to having to manage many, many, many different companies all at the same times, their projects, their goals, their implementations, and their trainings. On top of that, doing some product related work as well, helping
Right.
them with their products, some of the questions they had about the mortgage industry. But I did learn a lot while I was there. I was exposed to mortgage, insurance, solar. We
Yep.
had quite a few private EDU clients while I was there.
Yes. Yep.
And I was also introduced to lead management best practices, while I was
Yeah.
there. I see so many different strategies.
Yeah.
Yeah.
No, I'm fascinated. This is one of the reasons why I love doing the podcast, because I'm fascinated with uncovering and learning about people's journey, right? And I believe everything happens for a reason. And I think that, you entering the workforce during the financial crisis is like the unemployment rate was extremely
Off the
high, right?
charts.
Like, I mean,
Yeah.
it's so hard. Like I said, the people had to be willing to take jobs much lower than what they thought their pay. You were coming into the workforce, but like I said, other folks that were been established or been around had come down. But you know, you know, you got lucky in the sense that you got that first call and you got had a great training program and it taught you a lot. And then you worked so hard within Velocify, you got recognized within Velocify your work, and then you you know, obviously master and you became a loan officer in between that, but like you were able to learn so much. And at the time too, and after the financial crisis, companies like mine, Double Positive, we had to diversify way out of mortgage too. I mean, we were excited for the direct to consumer mortgage business to start growing, but we also got into education, insurance. I learned so much too. That was a big pivotal time for me to expand my Rolodex and learn about the KPIs and workflows of these other verticals, even though there's a lot of similarities in, you know, customer lead acquisition. But amazing story, dude. And so like what propelled you from Velocify to ultimately where you are now at Active Prospect? There's how
Sure.
things kind of, what was that second chapter?
Oh my goodness. Okay, yeah. So the second chapter is actually a lot more exciting than I would say the first chapter was. So what happened was when I left Velocify, I went to work for a company called First Direct Lending out in
Yeah.
Irvine, California. And they became refi.com. Working for
Wow.
that company, I learned a lot. I worked under Mike Eshelman, which I know that
Ashel,
you know.
man, what's up,
Yeah.
brother?
He's a great boss. I have nothing but respect for that individual. But working for
Totally.
First Direct Lending, I went back from, being a consultant to many, many different companies to now going to focusing on a single company again, so I was going back and making that transition. And shortly after I started there, they decided that they were going to put in an auto dialer. And I had contact center experience, but I never did not have auto dialing experience. So I had to learn how auto dialing works, some of the nuances of it. I had to train myself on a brand new program. And I also had to train the entire company on the program.
Yeah.
So basically, through a lot of blood, sweat, and tears, we got that up. We actually started our launch in Salt Lake City. We had a call center out there.
Yeah.
And
That's right.
over time we expanded it to the rest of the branches. Um, Part of the reason why I think it was so challenging when I was there was that, towards the end, after I did all this work to do all this training, the rate market shifted. So the rates started rising pretty dramatically during that time that I was there. And we actually serviced fair to poor credit profile customers quite a
Yeah.
bit. That was bread and butter. And we were like one of the only lenders in the country that would help
That's
these
right.
types of customers. And but they're very payment focused, right? So, if you can't save them 150, $200, they may not pull that trigger, right? So our business pretty much plummeted. And
Yeah.
so remember we went through the first round of layoffs. I was fortunate enough not to be a part of that. And then on the second round of layoffs, I was let go. Now, the reason why this was a little bit tumultuous for me was that I had actually, my wife and I had decided that me, my wife, and my baby were going to move back to New York. So we had already paid for the shipping container, we had canceled our
Uh,
lease, and this was like, I think a month before we left. And I remember talking to my wife about this. I said, I know what's going to happen. We're going to get down to New York and it's going to work out. It'll be just fine. So I took my whole family. We drove across the country. I was in a U-Haul, chugging
yeah.
along in a U-Haul
Yep.
down there. And, so we
It's
went
awesome.
that we went down there to New York. And while I was in New York, I was doing some like odd jobs here and there, consulting work and stuff like that. And then I actually got a call from Jessica Manna over at Fairway Independent Mortgage Corporation. I don't know if you've met her before. Great
Oh,
individual.
Jessica's amazing too. I'm super. I'm glad I really am. It's amazing all these people tied with you because I've never connected all this lineage, but Jessica's an OG. She's amazing. She's at Better now,
Yeah.
building out direct consumer with Chad
Yep.
Smith. But amazing, dude. You've had some amazing people, right? So keep going. Yeah, sorry.
Yeah. So it's interesting, when I was at Fairway, I was like, I know mortgage, but I didn't realize that I didn't know distributed retail mortgage. And what I mean by that is that lead management is very different when you're
Yep.
working with a branch There's a lot more personalization involved. They own leads, right? Whereas in a true blue contact center, it's like, hey, we've got a bunch of leads. What's the best way to mass market to these individuals, right? There's a completely different
Yes.
ecosystem. I realized pretty quickly that that was not the place I needed to be, and I mean that very nicely. It's they have a
Yeah.
great, they actually have a wonderful company, but I do better in a direct to consumer call center from an administrative standpoint,
Yeah.
etc. So I left that company fairly quickly. I think I was there for a little under a year actually. And I picked up a job at Cardinal Financial Company Limited Partnership.
Yep.
I was the director of lead marketing there. I was there for, I believe, 3 to 4 years. And this is when the chaos really started for me.
Yeah.
So I started, and it was like a couple weeks into when I started, and my CEO pulled me in and he's like, "Hey, Mike, I know we have a kind of a large company, but I need you to implement a dialer and a contact center software in 90 days." And and so mind you, we have branches, all over the place. We had some in Dallas, we had some in Maryland, we
Yeah.
had some in, Arizona. So I had to, really quickly kind of ramp this thing up,
Wow.
document it all, implement it all, et cetera, across that company. And at the same time, also, I was in charge of the different vendors, so
Yeah.
whether it was technology vendors, lead providers, you name it, I was negotiating contracts, controlling the lead buy, making sure acquisition costs were in line with it. And, so that first year when I was there, I got there in, it was what, late 2018, early 2019. That first year was really like I call it the dialer phase. That's when we were getting everything
Yep.
operational with that. And then 2020 started, and that's when the COVID lockdowns came into play. And the first couple weeks there, I think we all in financial services were kind of like, what's going to happen? We're not really
Right.
sure. And then they started really pumping those, the Fed started pumping and those rates
Oh,
started
I
dropping.
remember.
And then it was off to the races. And yeah, just boom. I mean, we blew past all of our projections. And I remember at certain points, I had lead providers literally begging me, saying, "Hey,
Yeah.
we have so many
Gushing.
customers right now. What can what price point do you need? Because I just need to get rid of these. I've got too many to
Gushing.
handle."
Volume
Yeah.
was so many consumers, the mass market, the media was headline after headline about rates and because of
Yep.
the pandemic. So I remember so many lenders were just overwhelmed. They had to like pause or throw, slow down the
Yeah.
volume, or they had organic, their own organic volume that they're working, or leads that were
Yeah.
in the queue that they wanted to keep through, that they had like parked for a while, that were on the fence. Now you could make those deals happen. So it's like that was a crazy time, man.
And to your point, what's so interesting about that was when I worked for Cardinal, every company they have their own small process issues, right?
Right.
There's some things in their process where when you're a medium-sized company or large-sized company, you're like, oh, these are small, it's not that big a deal. But when you introduce large volumes through that funnel, you start seeing these breakpoints
Yeah.
really quickly, because all of a sudden you're like, oh shoot, this thing takes a long time for us to do. And we may
Yeah.
have to go hire bodies. And in some instances, we didn't have the bodies to go hire because they were basically every other shop had them, right? And so there was a lot of interesting things that happened when I was there. Got some wonderful relationships, whether it's for vendors,
Yes.
technology partners, tons of experience with systems and integrations and processes and procedures and documentation. You name it, I learned quite a bit there. Um, and so after about, I think I was there for about 3.5 years. I left that company. I actually called Scott Payne. And yeah, I know you know Scott Payne, right? But yeah, near
Scott
and dear to
A.
my heart, man. He's probably one of the nicest
The
individuals
best.
that you'll ever meet. Yeah, I mean, he's just,
Yes.
if anybody in your audience has not met that man, you should go connect with him
Follow
on
him
LinkedIn.
immediately.
Yeah,
Yes.
try to meet with that man. And so he had a company called SDP Solutions, and really what it was like we were a lead management CRM/contact center consulting firm.
Yes.
So like we would come in, we would review all your lead management and center strategies, and we would make recommendations and do some of those implementations ourselves, right? So whether it was on, Velocify, Five9, you name it, that was stuff that we did. And we even did some instances where we would go into companies and we wouldn't even do the work, but we would make the recommendations for how they should change their processes and procedures to better streamline their sales.
Right.
And that worked really, really well for a couple years. And then what happened was the rates rose. And when the rates started rising, I would say like 90 something percent of our customer base was financial services,
Yep.
primarily in mortgage lending. And just like everybody else, we saw the business go down. So we were actually acquired by a company called Shape Software at the
Yep.
time. And I worked for there for just a little bit. It just didn't end up being a good fit for me. But that
Yeah.
particular software, I actually like their software. So I've worked
Yeah.
with many different CRMs in the past, and what I liked about their software is that it's very flexible. They are constantly making changes to their products and enhancements to their products. They support many, many different verticals. And unlike, I think,
Yes.
some other consultants that may be out there, I actually like competition within the CRM and lead management space. I think it makes all of them better. And
Oh yeah.
naturally, having a new player come into the space for either mortgage lending or insurance or whatever it may be is exciting for me. And I just like to learn new systems. So, when I was over there, it was just interesting to learn a new software, see how a different CRM company actually operates from the inside. And it was definitely an interesting time for me, to say the least. And then after that, I when I left that company, I went to go work for ActiveProspect, and that's where I am today.
It just, yeah. And so, man, wow, just tremendous again lineage of experiences and you learn from each one of them. You said that earlier too, right? You just try to grab as much from, uh, you need some good training, but you also just pick up so much from just being able to learn that different aspect or that software or implementing a dialer. Like, I mean, like, hey, dude, go do implement a dialer. It's that easy,
Yeah.
right? Um,
No dialing experience, by the way, at the time. Like I knew
yeah.
dial, but I didn't know anything about auto dialers.
But you've every day now there's continuous evolution in our space and I'm excited to talk to you about Active Prospect. As I mentioned when I started earlier, Mike is now the GM of consumer finance at or financial services, sorry, at Active Prospect. And so congratulate you came in initially as client success, right? Like that you were working off client success and
Yeah, so I was the
ultimately,
director of professional services, and then what happened
yeah,
was they saw my potential within the financial services vertical, obviously with the background,
yep,
and I'm very, very excited to be working with this vertical. I think there's a lot of opportunities and things that I could help Active Prospect with, and we have many, many different partners that we work with, whether they're technology partners, you've got publishers, seeing the
yep,
publisher side is definitely different. Seeing the different advertisers that are out there, and there's so many things that are involved with what we do. There's a lot of relationship building, there's a lot of
yes,
deals to be made. Then, on top of that, what Active Prospect is really about, we as a company, we really care about what we consider like the general customers in the United States. Like we want leads to be treated as people. So like back in the day, I mean, we're all aware of this, right? There's some firms out there where they're like selling extremely large lists of records, people are plowing through them. It's just a bad customer
yeah,
experience, right? As
horrible.
individuals. And we really, really care about customers. We're obviously very adamant about compliant, which is what our tools help them with. And we care about everybody in the ecosystem. Our job is to help educate, and just make it a better place for everybody involved.
Amen. I think it's a smart way to go about it. Like you said, work with key people that you've now built out such a great relationship. You're so well liked and respected. Leverage those strong relationships because that's how we get the good word out. And I agree with you that you and I are both part of Responsible Enterprise Against Consumer Harassment, Reach. It's important for us to know that the industry did get a lot of, there was not everybody, obviously, but a lot of bad actors are just, mistreating consumers, like treating them like zeros and ones, literally just
Yeah.
not looking at the human experience and actually saying, hey, if I was to get a new mortgage, this would be like, if I was to go through like this, it would be horrible. So we are seeing the ability to transform the space now through this new regulatory period. Oh, I know we'll talk about that, but like macroeconomic conditions right now, mortgage, you're a mortgage OG, like what you've lived through coming in the financial crisis, all through the ups and downs of direct to consumer, then obviously the pullback, rates going up, and then then rates come back down, the pandemic, and then the rates going back up.
Yep.
We think we're at a period now, right, where rates are they are trending down. I think they're about a year and a half low right now, which is great. But we all expect them to go lower. And the Fed has been talking about that for a while, but I know the last 3 years have been tough on you for working so closely in the space, like
Yep.
you talked about when you were at SDP, and a lot of our friends and peers that have. But there's some excitement, some optimism on growth back for direct to consumer. Uh, so is that part of your vision, is now under Active Prospect to build out a successful mortgage program?
Sure. Yeah. So the mortgage industry, and I know that you're aware of this, right? When you look at the mortgage industry, I think we did, it was what, about 3 years worth of refinance activity, 3 to 4 years in a very, very small comeback period of time during COVID, right? And that's just because we had very, very low rates. And,
Yeah.
the environment was basically the best environment for the mortgage vertical of all time, which is crazy
Yes.
because we had the recession, right
Yeah.
after, look at like 2008, 2009, you had that recession. I remember
Yep.
when they started raising rates again, we were like, oh, we're not going to see rates that low again. And then boom, COVID comes and
Boom.
they plummets, right? And, and then when they started raising the rates, you started seeing, in the beginning, I think everybody was trying to see like, oh, well, how fast are they going to do it? And how long is this going to last? I mean, I've even had some thoughts where I was like, in the beginning, I was like, well, probably like a year and a half or so, and then it will
Right.
start to, get better, right? And but they rose those rates, man. They went through,
Yes.
they did quite a bit of raising of those rates. And then now, I really feel like next year there's going to be quite a bit of opportunity, especially in the mortgage vertical, but there's other verticals too, like, you got personal loans, credit cards, the whole
Yes.
nine, financial services. And I really feel like that particular vertical in mortgage is going to, turn the other page. You're going to see growth again in that vertical. Part of the reason, I think some of these lenders have skinnied up quite a bit.
Yes.
I've heard headcount stories of, from their prime to now, they're 60, 70% reductions in headcounts.
Yeah,
Some of them have
that's
gone
right.
under. Well, and, but the people who have been left standing, I think, are going to be really primed to make some good money, take advantage of that growth. And then also you're going to start seeing some additional players start to enter the space again, I think, through next year.
I agree. I think you're spot on. I mean, a lot over the last 3 years, we've had to see a lot of our friends and, companies downsize drastically, because they had to, keep the lights on, but also make sure
Yep.
that they were profitable. And that's part of business, right? It's when you work in a cyclical direct to consumer business, like focusing on refi, you're at the mercy of the macroeconomic rates, right? So we are in for I think a nice period here where rates will come down, and open up this nice wave for refinance. But other products, like you said, will be persistent here too. But like, um, the staffing, getting a new breed of staffing, I think you and I even jammed on this at Contact IO, is like, we're going to have to see a new breed of workforce come in, and it's going to take some time. So I think you're right. Next year, all these, we are already seeing a lot of companies try to hire loan officers and processors and underwriters and managers and everything. But it takes time. And, you can bring some people back that left the industry, some of those folks may have gotten other roles and other jobs, other career paths, but they may come back now because they know they could jump back in. But you're gonna have to train and groom a new breed, whether that's entry level, kids out of college, whatever it may be. It's gonna take some time, but that's okay. The thing though, I think and I know you're got a decent grasp of this well. I want to ask you too, is this may be the first refinance wave. This is the first refinance wave where we'll actually see AI involved in different various ways
Yeah,
of whether it's staffing, communication. So what are your thoughts around that too? Like what are your early reads on AI
sure.
helping this next new direct to consumer refi push?
Yeah. And what's so interesting when we were jamming about, basically ramping back up the mortgage industry, that challenge is, I think it's going to be a lot harder than some people think. You had mentioned like, hey, you could pull some industry experts, they are out there, but there's a decent amount of people who were in, during the COVID times, even a little before, as the rates started rising, they left the industry, they may have found other jobs, right? And getting them to come back may be a challenge. And even some of those people that you do get to come back, the environment that they're in today is so much different than COVID. Like a loan officer during COVID, it was like, hey, do you have a pulse? Oh, you have a rate? Cool. I've got a loan for you, right? And it was really easy to sell. Whereas now you have to sell, your company, the value, processes, procedures, right? So it's so different than what it was before. So there's going to be some unique challenges there that I think some companies have. There's technologies that they need to ramp up. They need to hire some training positions, and some instances build a robust training program to train new loan officers from scratch, kind of like how I started back in the mortgage industry, like doing
Exactly.
blue junior LOs, right? Hey, you know what? You're a
Yes.
junior LO. We're going to train you on this process, tell you how to sell a loan, right? Now,
It takes time.
with
Yeah.
AI, I think there's going to be a lot more impact, I'd say, with AI in financial services, and I think some people believe, as well as in customer
Yes.
service as well, and other verticals. So we've seen over the last, what, year and a half, 2 years, massive amounts of spending in AI,
Yeah.
like, tens
Yes.
of billions of dollars. I think actually at one point, I think it's actually hundreds of billions, if I'm not mistaken, within
Yeah.
that particular spectrum of our economy. And the reason why I think we're seeing such investment is because there's so much potential, for augmentations of services and things like that, can really bring values to companies and employees in that company. So when I look at AI, I think, let's look at it from a direct to consumer standpoint, right? And you've got shops who are fielding inbound phone calls, or they're placing outbound phone calls, right? Well, let's say those initial inbound phone calls, as an example, goes to a AI assistant, and that AI assistant can actually field all your questions, do
Yes.
pre-qualifying questions, and do or ask you some pre-qualifying questions as well. And then from there, once you get done with that part, then you actually get handed off to a loan officer with and potentially even a completed application in some
Right.
points. And from there, the
Right.
loan officer is basically
Yeah.
like, hey, okay, let's just review this, right? Cool, we're done.
Yes.
We're going to send you into processing, right? Same thing with outbound communications, right? We've already started to see tools that are out there where, um, as opposed to just like, hey, my CRM sends a text message or it
Yeah.
sends an email in a drip campaign, right? These tools can now have full conversations
Full
with you.
on. Yes.
Something that
Agreed.
would take, it would take 20 loan officers to do, you can now do with 10, 9, 8, etc. And, I think that's a part of it. I think the other part of AI is, truly using it for like lead management and routing capabilities. There's tons
Yes.
of potential there, like, where you can analyze every single data point of that record and then determine who's the absolute best person to receive that record. And then when they get the record, the AI can summarize things like the previous phone calls, things you should
Yes.
mention to them, bring in previous loans. Like there's
Dude,
just so much
I
opportunity.
I spot on, right? Because the theme here is efficiency and time is not on our side with human headcount. And so it's a race now to implement all the things you just said, outbound, inbound communications. especially think about it, a consumer that still meets a mortgage, the filter criteria, somebody probably has good credit,
Right.
somebody that, that is probably sophisticated enough to communicate and feel comfortable communicating through SMS, right? And like you said,
Right.
now the conversational AI SMS got so good that I feel comfortable talking to it. I think a lot of people do as well. I think every day as you call like your airlines or your prescriptions or wherever, like you ought to start speaking to AI. And I mean, it's like just becoming more and more of a mainstream. And I think the consumer finance, the loan officer in the mortgage space will probably be able to do that as well. Like I said, leverage that front end to help the communications. I also think you are spot on with lead routing and understanding now what your loan officer is saying, because I've actually seen software where it will break down every call. It will give you it'll the loan officer a scorecard, it'll give the manager a scorecard. In the past, dealt with this a lot of shops you're in. Your your answer for growth was turn on a lot more leads, right? Which
That's
we know
right.
we're going to need more leads, but we also know the leads business is going to look different in the one-to-one period. It's going to still be there, but we know that we're working through that, and you have to be smarter on who takes the lead, when they take the lead, how they take the lead. And I
Right.
think that this is the first time efficiency gain through communication and oversight on what your frontline staff are saying collide. And I'm excited to see who does well at it. Because you and I are in a position where actually we get to watch this play out
Mhm.
and we get to help them, of course. We're going to observe it, but I'm excited to see who really wins here and who does well and what we learn from that.
That's right. And what's interesting too with it is that, from like a quality control and compliance perspective, AI is really, really primed in that realm. If you're running any sort of a contact center, the old quality control method was like you would do like random sampling of calls, right?
Yeah.
You'd be like, okay, I need to go through review my sales calls. You're going through it, might have a little scorecard through it. You'd have to listen to the whole call, and then you have to go, okay, well, did they say everything I wanted them to say? What's the score on this, etc. Well, now you can run, hundreds of thousands of recordings through AI, and it can automatically score that call, look for the phrases that you want, right? And you can get these analytics in real time versus having to wait, an hour, a day, or weeks, depending on what your software is. And I think there's a lot of opportunity there with AI to make your firms more compliant, to have better sales process, better sales scripting, and analysis of those scripts. And I think the other part of it too, and this is a real challenge with CRMs and contact centers, is automated dispositions, where
Yeah.
basically I could see the realm where, today there's a lot of CRMs where you lean on the end user to make that disposition. And sometimes they do it wrong and they don't even know that it actually affects the company's metrics or anything. They're just like, well, I'm just going to choose the top one, whatever it may be. But imagine where the AI could listen into that call and go, okay, when that call is done, this is what the outcome of the call is. He needed to schedule an appointment. So I'm going to schedule that appointment for him. And he also mentioned sending his contact information. So I'm going to deliver an email with his contact information, right? And, kind of like your own, it's like an assistant in some ways, where I could see that working to supplement loan officers.
Dude, I hope there's a lot of our friends and folks that are building out their direct to consumer right now and looking for some advice or guidance on how to do this as efficiently. You just dropped some amazing bombs of intel on and helping really because it's true. If you're the problem is sometimes it's hard for everybody to see the forest through the trees because they're just like the CEO says, get back and grow, grow, grow. Well, we got to
Yep.
hire all these people again, like we talked about. So take a step back for a minute, strategize, build your infrastructure the right way. And I think that the tidbits that you just shared are very helpful in automation, right? Because we can learn from what we've done in the past, but take advantage of what's ahead of us or what's available now and implement that. And don't go back to just the way, that
Yeah, the old school way. Yeah. You're
exactly.
gonna get, you're gonna get
Exactly.
beaten by other shops. Their margins are gonna be a lot, they're gonna be a lot better than yours, and you're just going to not make as much money. You're gonna be spending too much on headcount.
Amen, brother. Well, let's jump into the present time, also on the compliance side, we just talked about it, 1-to-1. We are for the, I'll describe this briefly just so everybody at this point, if you're a performance marketer legion, you know what I mean when I say 1-to-1. But where we're at is in September, or we're in September now, but in January 27th will be the first day of business of where every consumer going through a flow needs to directly consent into speaking with the brand that they want to speak with in regards to whichever it's logically and topically related. So if you're going through a mortgage funnel, most likely you want a mortgage quote, and you're going to select a mortgage lender or two or three, because we hope that the shared lead or shared lender experience is still out there, and which it will be. And so now you actually will just select that process. And um, what are your, being an active prospect, you guys are one of the leaders in tech, compliance. You have a great tech stack. You help businesses with lead intake, lead management, and also, the compliance piece, of course, the visual screening and playback of the consumer filling out the form. How are you guys seeing it right now? I mean, here we are, September. Um, how do you think, what's your general observation of the space right now? We're not in panic mode, are we? Like, how's everybody kind of doing?
Sure. Yeah. So 3 months ago, we've already started the process of, educating the people within our ecosystem. We do the FCC webinars here at Active Prospect. And, up until I would say about a month and a half or 2 months ago is when we really started to see some activity in relation to this upcoming regulation that's coming in January. I think now that some of the publishers that are in the ecosystem have started to test out these models, where, there's really two different paths that can go, right? You've got like full exclusive traffic where
Right.
the company's listed in the disclosures, the customer just clicks submit. It's one entity that they're consenting to be contacted to. That's one way. We've also seen, the shared lead model, which is where you've got the consumer going through that lead form, and then it's got a list of entities, companies that are there, and those companies have check boxes next to each
That's
of
right.
them and they
That's what I've
submit,
heard too.
right?
Yep.
And
Yep.
it's been interesting talking to some of the different players in the space. A lot of them want to be as compliant as they possibly can, right? And some of them have some real, and even the buyers as well. We do see quite a bit of the buyers that are like, we want to be as compliant as humanly possible. But there are some real challenges with the check boxes. And the reason why there's challenges with the check boxes is that and one of the, we'll say, discussions that are had is, do we pre-check the check boxes or do we not pre-check those check boxes, right? And
Yes.
something we talked a little bit about in the last webinar series. And we've seen some publishers within the ecosystem who have gotten a little scared about not pre-checking those check
Yeah.
boxes because their metrics have
Their
gone down.
form, their media conversions are too much.
That's
Yeah.
right. But they're also
Yeah.
seeing downstream pressures from some bigger players in the space who are like, look, our compliance department's opinion is these can't be pre-checked. The consumer has to be checking the
Yes.
box in order to be compliant with the new upcoming regulation. And
Yep.
so there's been some interesting discussions with it. There's a lot of different variants that are going to come out of this. And I think ultimately in the long run, we'll say after like about a quarter after the January 27th date, we're going to really know what this ecosystem is going to start looking like. The first quarter or so, you're going to have some people who try different variants. Some of them are going to be very
Yes.
successful or not. But I think it's going to be interesting to see that play out. Now, the other
Agree.
dynamic that's kind of interesting is the regulation or the rule that's going to take place on January 27th. It doesn't just apply to leads that were originated on that date moving forward. So when you're getting one-to-one consent, you have to realize that this also applies to leads you acquired previously. So let me
Right.
give you an example. When at one of the previous lenders I worked at, our legal department's opinion was that when a customer submitted their information through a form and they provide express written consent, that we could call them up to 90 days
Right.
past that point, right? So come January 27th, I need to make sure that I have one-to-one consent for all the leads 90 days back from
Right.
that date, right?
That's right.
So what we've been educating our customer base on, especially the buyers and the ones that are actively calling and auto texting these leads, whatever they may be using, we've been telling them like, look, you really need to start talking to your publishers now. They need to be testing on these variants now. You need to see you need to understand how they're going to do it. You need to know when they're going to do it, because you can imagine, you've been in the space
Yeah,
before. um, you you change how your form is designed, and
that's
if your
right.
volume drops by, let's say, 30%, that doesn't just affect you, that affects all your buyers, all
Everybody.
different
Yep.
advertisers that are there. And
That's right.
that can be pretty dramatic for certain advertisers who lean on your company to generate the bulk of their business. So you want to start testing these things now with everybody involved. So if you're a buyer, reach out to the lead providers. If you're lead providers, you need to start communicating to your clients about what's going on. You need to be in this together. And ultimately, I think in the long run, it's probably better for the ecosystem that this communications are happening, because sometimes some buyers, they don't treat the lead providers as partners,
Yeah.
right? I mean, I look at these things as, I always looked at all the vendors that I worked with. They were my partners. I tried my very, very best to do the best by them, by the best by my company at the same time. And ultimately, when you think about it, my success, when I was a lead buyer, I was buying 2,500 to 3,000 leads a day at one point.
Yeah.
When I was successful and and a advertiser's campaign was successful, then I would buy more leads from you, right? So I had all the incentives in the world to work with my different publishers, because I wanted to make sure that I was getting the best traffic that was good for my company.
Absolutely. Thank you so much for sharing all that information. I think in your perspective, I agree with pretty much all of it. I mean, I think it's really important, and that's why you and I are part of Reach as well, right? We're trying to help build some sort of standardization standards that are going to help the lead generators, feel confident that they can adhere towards, and we can treat consumers the right way. We're not harassing them. We can treat and give them the experience, the opt-in, the journey that we want everybody to win, right? And we can't stop consumers that are going to shop online. It's by far the highest form of advertising and medium out there. And our friends at Lending Tree started the whole banks compete, you win for a reason back in the late
Yep.
90s, right? Because it's like the consumer does need to get a competitive quote.
Yeah.
And I think that's how they win. And so I think, but you're right, like making sure that you start that communication now, because there should be testing in October, and there will be some. It's okay if, like you said, in Q1, as we go, there's different evolutions and variations, but at least have your first baseline established, because especially in a category that we're in, like mortgage, even credit card debt loans, it's the consumer doesn't pull the trigger right away. So you do want to have the ability to remarket to them as we're in this rate environment, right? Like you want to make sure that you can remarket to them.
Yeah.
So the first version of October probably is what I'm hearing also out there. And whether it's pre-checked or checked, I mean, you're going to obviously ask all your buyers. If you flash back to 2013, when the mobile provision of TCPA came out, everybody was kind of in that period too, where it's like, where does the language need to be? Does it need to have a checkbox? Does it need to be
Right.
the submit button? And somebody built that marketing partners list, and everybody copied it. And I think that that's what's going to happen too, right? Is that we'll get to that point where there is a tech flow that everybody agrees through, that the buyers agree to. Active Prospect, I appreciate you guys pushing out a lot of information, education, because I look at you guys as one of the major leaders in the space as far as not only, like I said, the compliance side, but the tech. And I think that's helping matching and making sure the flow, the consumer's okay, the buyer's okay, seller's okay, everybody's agrees into that. So we'll all learn through that together. But let's touch on the compliance piece too. I think something that isn't at the front of this rule change is the record keeping and storage. And I want to help educate buyers on this. Is that, from my understanding, my interpretation is that same date, effective the same day, you now will have to have proof that you have the ability to contact this consumer um, as well through the TCPA, and that you can't just rely. In the past, you would rely on an agent to be able to prove that for you, and the agent would be the lead generator, and you say, "Hey, lead generator, please provide me proof," and they'd send you a copy of the token that they may have had from their ActiveProspect account. Is it fair to say and right that you guys should be signing up and working with direct buyers to help come into compliance with this, correct?
Yeah, so, from a record keeping standpoint, it's not just within the TCPA, but there's also within the TSR, the telemarketing sales
Ah,
rule. There's also a record keeping component to it as well. And, when you think about the TCPA, it's probably one of the most dangerous laws that's out there to, people who are affected by it. So, this is one of the very few laws where a single person can get through your funnel, bring you into a court case, class action lawsuit you, and then you end up with fines that can be tens of millions of dollars. Like, it
right.
is crazy,
Oh,
right? And, from a documentation perspective, I always, even before I worked at ActiveProspect, I was an ActiveProspect client at one point. So, I have no
yeah,
problem disclosing that. I use the software myself. Um, having full documentation of that customer, going through that form so you can see the disclosures, be able to audit what's on those disclosures. So, you should be rejecting leads that don't meet your disclosure requirements as well. And then when that record is submitted, being able to generate a certificate that shows what happened on that page. So it shows, whether it's technical information on the device, it shows what language the consumer agreed to, it shows a full session replay, audit logs, etc. Everything is there within the certificate. Now, some other things you can do as well with ActiveProspect's products. So we obviously, Trusted Form is TCPA compliance. That is what we do. We are very, very good at it. But we also have a software called Lead Conduit, and I was a user of this tool. And I've actually, even prior to working at ActiveProspect, I've actually talked about, from both a compliance and a performance marketing perspective, why you should actually use a middleware between your lead providers and your CRM platform. And the reason for that is because there are checks and routing decisions that you need to do before you even have that record hit the system. So I'll give you a good example. If a known litigant goes through your form, let's say it's your own owned and operated website. They find your company online, they fill out that form, they click on submit. I want it to be checked against a known litigator list. And if it hits a match, I don't want his phone number. I don't
ain't
want his
messing
email.
with it.
Yeah, I don't
Yeah,
want that thing in my CRM. I don't want, God forbid, I mess up one day in my configurations and he gets brought into a campaign and boom, I've just, auto texted
sure.
this gentleman and now I'm at a TCPA lawsuit for millions of dollars, right? So filtering those out, filtering now, there's actually some really good tools to detect fraud. So like there's things like bot detection tools. So I don't
Yep,
know if your audience knows this. There's literally people who go online, they build bots, and the
yep.
bots fill out forms, which is wild, right? There's some people who
Horrible.
aren't aware of that. They are there, they're out there. You should
Oh
be
yeah.
checking that. You should be verifying that the phone number and the email address are accurate for that
Valid.
consumer.
Yep.
You should be checking against like internal DNC lists, internal email lists, etc. And then once you're done with all those checks, then you could get into some like cool performance marketing stuff, right? Where you can append demographic data to it that's helpful for you to be able to sell the customer. Utilize lead scoring. Lead
Yep.
scoring, if you can lead score a record before it hits your CRM, then you can do things like assign it to certain individuals, assign it to certain teams, tier it, whatever you want to do. Or you could even potentially say, hey, you know what? I want this record in my CRM, but I actually don't necessarily want my sales teams that are a part of my company to use it. I might send it like a low scoring record to a third party to pre-screen it, right? Have them go
Yeah.
pre-screen that record, do all that stuff prior to it actually hitting your platform. And then
Right.
once you're ready, okay, then deliver it and put it into your CRM system. So, but we are, at Active Prospect, we're very big about, obviously you want to keep those records. And, one of the absolute biggest reason why you want to keep your TCPA consent is that, there will come a time where you get a TCPA lawsuit. right?
Yes.
There you will get at times where some individual will come to you and say, hey, I've got, I don't think I gave my consent. You can produce that certificate for you. And having it on your side of the fence, not only is it like a legal requirement, but you also need to think about leaning on a third party to provide you with information that could potentially save you from millions of dollars in a lawsuit,
Yeah.
right? So, I mean, that's something in and of itself where you're like, look, I should definitely, regardless of all the other regulations that are out there, I want this on my side of the fence
On my
anyway,
side. Now.
because
Yeah.
God forbid that, like, imagine a situation, and I have heard of this before, where let's say I leaned on a third party to do this, like what you had described in the past. Let's say it's a marketing agency. Well, what if that marketing agency goes under?
You're screwed.
You're screwed, right? And you have
Yeah.
no records of that consumer
Yeah.
going through the form and you're paying large fines.
Yes, excellent point. And you guys are, like I said, I'm looking at a handful of businesses to help us be the pioneers and carry us forward to this next chapter, this next evolution of online journeys and consumer, with through the one-to-one period, because we need you guys. We need you all to help, you're seeing so much data and understanding this consumer journey. I think you can help educate and implement, and you're the only company that has the compliance piece and the tech piece together, and they can be separate, but you just described how they intersect. And I do agree. I went through this recently with one of my clients going through lead conduit, all the facets that you just explained about setting up. It goes back to that time and efficiency, but also just like it's smart. Instead of just flooding your CRM, you're doing all the checks and balances like you just talked about. Um, we're going to wrap up here in a second, but I also want to note that I'm really, really excited for you, for so many different reasons. But as I've seen the financial services space go, uh, over time, it's usually like one product does really well and the other falters because they're usually counter-cyclical. I
Yeah.
think we're in a period now where pretty much all of them can be successful because we're at the early stages of a mortgage refi,
Yeah.
production wave. The consumer credit card debt business is, full pedal to the metal, right? And consumer credit card
Yeah.
debt's at record highs, and consumers need reprieve, need help to get, and loans, right? And I think there's even another element which crosses over to Ruben's business at Active Prospect and Home Services. There's going to be people that want to take some of this cash, whether it's from their home or a loan to get a new
Right.
roof, a floor,
Yeah.
roofing, windows, solar, so these are all things. It's a crazy intersection and I'm super excited for you because I know financial services, all of these different sub verticals have the ability to grow, and will grow, and you're going to do an awesome job. Um, give me a because you really, I think you talked a little bit about this obviously throughout the show so far, but give me a prediction. Give me a something you
Oh,
feel,
goodness.
uh for 2025. I'm a big football person. I watch, every week there's the,
Yeah.
bold predictions. Give me a bold prediction. What do you think? What do you see next year?
Oh man. Well, geez. Well, I actually think that you're going to see um in the really particularly in the contact center space, I actually believe you're going to see like true avatars created that basically interact as AI. Imagine a situation where, when you go to your bank, like, which is, now it's a lot more rare, but imagine you go into your bank, you're talking to a person, right? It's a live person. Imagine this person is on a screen, it's an avatar, and that person is backed by AI. So you can actually do your entire consumer financial product or interaction with an avatar. I could see the same thing within contact centers. I actually believe it's going to be anywhere between like a 15 to 20% reduction in certain verticals specifically because of AI. And I'll give you a good example of this. Let's use the pre-screening questions, right? So let's just say you've got like 100 phone calls, right, in a day. Or let's just use it for thousands, right? You've got a couple thousand phone calls, depending on the size of your company, right? And you need a certain number of people to answer those calls, talk to these customers, figure out what their problems are, and some of them are more complex than others, right? And then solve their problem. right? So that's like what a contact center is in a nutshell, or sell them on a product. Now imagine the first 15 to 20% of that phone call with pre-qualifications is handled completely by AI agents that can scale for you. Well, those hours that you're working and taking those phone calls, you don't need that headcount for you. So I could see some pretty dramatic reductions, as AI starts to mature and you start to get like these avatars and things that they're talking about. I could see some pretty dramatic reductions within the contact center realm, specific to that in general.
That's a good one. That's a good one. Uh, Mike Peronto, thank you so much for joining me back from you're my first guest, dude. Thank you for kicking me in the
Hey.
gut at Contact.io. But dude, I think everything happens for a reason. I really love that we got to go home and spend time together
Yeah.
at Contact.io. I'm real excited for you and the Active Prospect team. This is a great next chapter for you, man. And thank you for joining us on One Liners, dude. Really appreciate it.
Yeah, and you know what, Joey, I really appreciate you bringing me on the pod. I know I semi guilt tripped you into it, but we were in the Uber. But you know what, you're a good person, and
Thank you,
I
brother.
appreciate all that you do, and for having me on here. So thank you.
Awesome, man. Thank you.